Blur jumped nearly 33% after weeks of tight trading, but the move is already testing its own heat. The token moved from the 0.025 area to highs near 0.038 before settling around 0.034. That is a sharp range shift, not a guaranteed trend change, and the difference matters for anyone reading momentum. That makes the first question less about future targets and more about whether the new range can survive normal profit-taking after such a steep candle. A strong candle still has to build a floor. The setup started with compression. Price had been moving sideways in a narrow band, which means neither buyers nor sellers were forcing a clear direction. When buying pressure finally arrived, the chart expanded quickly. In easy terms, a quiet range turned into a fast move because there was less recent trading history above it to slow the push. Breakouts from compressed ranges can move quickly because traders who waited for confirmation often enter at the same time, while short-term sellers are forced to reprice. That crowding effect can make the first breakout candle unusually large. Blur also stretched above its upper Bollinger Band. Bollinger Bands are volatility bands around price. When price pushes outside the upper band, it can show strong demand, but it can also show that the move is running hot. That is why fast breakouts often pause, chop, or pull back before deciding whether the new range is real. A band stretch is useful only when paired with context, because momentum can mark the start of trend expansion or the moment where short-term buyers become exhausted. Context keeps a hot indicator from becoming a simple buy signal. The RSI is another heat signal. RSI measures how strong buying or selling pressure has been over recent candles. Here, the reading moved toward the upper range near 80, which usually tells traders the buying burst has become crowded. It does not force a reversal, but it raises the risk of short-term cooling. Overbought does not mean price must fall immediately. It means traders should watch whether the next pullback is shallow and controlled or fast and disorderly. A controlled pullback would tell traders demand has not vanished. The support map is specific. Immediate support sits near 0.03, the breakout zone buyers need to defend. Stronger support sits near 0.025, the base that formed before the move. If the token loses those areas, the breakout starts looking more like a spike than a stable higher range. Support near the breakout zone matters because it shows whether former resistance can become a floor, which is a common test after sharp technical moves. A failed support flip would weaken the whole breakout story. Resistance is also specific. The near-term ceiling is around 0.038, where the rally already met supply. A sustained break above that level would make the 0.045 to 0.05 area the next test from the supplied structure. Without that confirmation, the market is still deciding whether momentum has follow-through. A move through resistance is stronger when it closes above the level and attracts fresh participation instead of briefly wicking higher and fading back into the range. Acceptance above resistance matters more than touching it once. For Blur, the next signal is not a distant 2030 target. It is whether price holds 0.03 during cooling and then retests 0.038 with real volume. If buyers defend support while volatility settles, the breakout has structure. If support fails quickly, the sharp move becomes a warning about chasing thin momentum. That is the cleanest market structure read. Support behavior after the first surge tells more about demand quality than any long-range target. Demand quality is what turns a spike into a structure.